you have to decide to take action and get over all your excuses and all your BS and all those limiting beliefs and just grab life by the horn and make it happen. And it's going to happen over and over in business, but at some point, you got to decide to become the person you want to be.
Welcome back to the Mark Ferris Experience. Today, we are going to be interviewing John Casmon. He is a real estate entrepreneur. He's partnered with investors and has purchased well over $100 million worth of apartments. So prior to this, he's actually worked in corporate America, so doing marketing for General Motors, Nike, and Coors Light as well. So he has some vast experience in the business and entrepreneurial world and investing world as well. He hosts the multifamily Insights podcast and is a co-creator with a networking summit as well. We'll talk a little bit about that. He's a coach, consultant, business owner, entrepreneur, you name it, he's done it. John, welcome to the show.
Mark, thank you for having me, man. I appreciate that warm introduction.
Very cool. Well, why don't you take us back to the beginning? When did entrepreneurship really, grab onto you? And maybe you can tell us a little bit about your origin story.
Yeah, so I think I was always curious about entrepreneurship, always was something that sparked my interest, but it really started for me when I was working in corporate America. I was at General Motors, as you alluded to. And when I was there, it was 2007, 2008. And of course, that's when we went to the economic downturn. And at the time, I thought it was just my company. Then it became clear this was an industry issue. If you recall, the CEOs all flew down to Washington asking for help. And, that was a whole, fiasco. And then from there, it became clear that this was not just limited to the automotive industry. This was our overall financial ecosystem. And I remember one day in particular, I went into the office. I knew we were having a round of layoffs. I was told that I was okay, but I went into the office late. I went as late as I could go. And I remember my phone. I don't know if you remember desk phones, right? But we used to have a desk phone. And my phone had a little red light, which indicated there was a voicemail. And my heart skipped a beat because in my head, this was a voicemail telling me that my position had been eliminated or I was being let go. And I waited maybe 5 to 10 seconds before I picked up the phone to listen to that voicemail. And I listened to it, and it was actually from the guy who sat right in front of me. And he had been with the company for 22 years. He was let go earlier that day. He was completely distraught. He was on, different medications. He didn't know how he was going to pay for his medications going forward. And he was just ranting. And two things went through my head. One was just empathy for his situation. He was what we
Mm,
call a lifer. His plan was
you're right.
work there until you retire, get the gold watch, and retire, and go off into the sunset, right? And that was taken away from him. But the second thing that went through my mind was, I never want to be in this position. So
Mm,
that turned me into what ultimately was real estate. Started investing in smaller multifamily, moved to Chicago, got married, bought a two unit building, starting to build out that portfolio. And the same thing happened. Working at a company, we're growing, we're winning awards. I'm working on Mountain Dew and Nike and Coors Light and all these advertising campaigns. And the company actually grew a little too fast. And one day that company ended up going into bankruptcy as well. So that was the day where I realized real estate was working, but here I was right back where I started. So I needed to adjust my strategy. Ultimately, that led me down the path to find what we call a syndication and raising capital, working with other investors. Fast forward, I ended up partnering with other investors. We've invested in over $140 million worth of apartments. And today I help other people do the same. So either working passively with us, or if they want to raise capital for their own deals, we help people do the same.
mm, so good. That backstory there really hits home because when I see people, for me, when I see people working, say, at a donut shop when they're 70 years old, you can see that they're working there not because they want to, but because they have to. And so that's where looking, you going through that experience yourself and seeing others that were further down the road, that's like a wake up call. And then like for me, when I see, these older gentlemen or could be females as well. They're working at these. That to me is very motivating myself. It's like down the road, it's like we have one life to get it right. And when you get down the road, it's not like you get a redo, right? And so really figuring out is what you're currently doing, are you on track or not on track to be able to get to, we'll call it down the road, you're working because you want to, not because you have to. And to be clear, for me, I love to work, and I don't ever think I'm gonna formally retire and kinda kick up and just live on the golf course. But when I get down the road, it's like I'm working because I want to, not because I have to. I'm not sure if that resonates for you as well.
No, it absolutely does resonate, and I would even go further to say, my motivation wasn't even retirement. It was simply looking around the environment and recognizing the lack of control I had over my career. And I'll go back
Mm,
to my GM
yeah,
days. I remember distinctly when we went through bankruptcy, right? Obviously, there was whole reorganizations that take place, and I know that's happening at a lot of companies across the country right now. Well, we had a woman who was out west in California. She relocated to Detroit to head up our division. Within about 18 months, they relocated her to Beijing. Now, this is someone who has uprooted her life, and you and I are talking about kids, right? You got teenagers. My oldest son is heading into that age. Her oldest son, was in high school. And I just pictured, man, if I stay in this kind of environment, is that what I'm gonna have to deal with to chase this dream? To have my kid uproot his life, move from California to Michigan, move from Michigan to China to like you can say no, obviously, but now you're missing these opportunities to grow in your business. And I just really did a reset. And at that time, I didn't have any children. So I was able to take a step back and say, who looks happy here?
yeah,
And I asked that question. I looked at my leadership. I looked at the CMO. I looked at, the vice president of marketing for our division. I looked at the managers. There was one guy who looked happy. Now, keep in mind, the company is in bankruptcy, right? So
yeah,
there was
yeah.
reason for everyone not to walk around smiling every day. But there was one guy who was still genuinely happy and had great energy every day. His name was Jack. I remember one day I asked Jack, I said, Jack, everybody else in here looks miserable. Why are you so happy? And
Yeah, great question.
Jack said, "Well, I don't have to work here. I work here because I enjoy it." And I knew Jack had some investments, but I didn't really know to what extent. So Jack and I went to lunch, and Jack told me he had properties out in Colorado. He had, three other businesses. Like Jack was an investor. And that really opened my eyes because I didn't know anybody who really invested. You know what I mean? Like I grew up, I'm the first one in my family to go to college, the first one to graduate, the first one to kind of really go into corporate America. So I did what we're taught to do, go get a good degree, go to college, get a good job. My dad's as blue collar as they come. He's worked the same job for the last 25 years. Like that's the mindset. So Jack really helped me take this idea that I had in my head and he put a face to it. He put a game plan to it. So when I left, even when I left to go to Chicago, I left with the intention of investing in real estate and to start to transition from a W 2 corporate employee to an investor, which is why when the second company went into bankruptcy, I wasn't where I wanted to be, but I was on the track and down that pathway where I could say, okay, now I know what additional pivots I need to make in order to make this my new career.
Yeah, that insight there, and even you asking that question, I think most people wouldn't even slow down to look around themselves. I think we get locked into, we'll call it treadmill in life, right? It's like slowing down and thinking like, what am I doing right now? And what are other people doing around me? And is this where I see myself in the future? Um, and learning and asking that, slowing down, that question was probably like, sounds like it was a real eye opener for you. And it just solidified what you were already on track to do. So tell me, you had this conversation with an investor, and he was an entrepreneur as well, and he was doing it because he wanted to, not because he had to. What was your next step after that kind of awakening? Was it just like, I'm going to continue to double down on the investing side, or was there any like shift that you made right after that conversation?
Well, I definitely had some hurdles, right? So this is Detroit 2008, 2009,
Yeah.
2010,
Oh,
right?
yeah.
If you recall
Well, I
Detroit,
saw that I tracked the real estate prices there, so I'm very aware of
yeah. So
what
picture
happened there.
picture
Yeah.
being a young corporate exec, no investing experience. You don't know anyone who invests, but you start broaching the topic of investing in real estate in Detroit at this time. Let me tell you something. Anybody who owned a house was like, "Oh, you want to invest? Hey, man, you can buy my house." And I was like,
Yeah.
I don't think this is exactly what I had in mind. When everyone's trying to give you their property, and keep in mind,
Yeah.
Detroit at that time literally was giving away properties for a dollar. They just wanted you
Yeah.
to take it
Yeah.
over and manage it, right? They were
Right.
giving away buildings in downtown prime real estate with like 99-year leases for a buck because they just needed somebody to take it over. So they
Right.
literally were giving away real estate at this time. So I'm like, you know what? I don't know that much about investing just yet, but I feel like if they're giving you the property, there's a catch. So I should I should learn a little bit
Yeah.
more first.
Yeah.
So I ended up like I said, I moved to Chicago, decided, hey, let me get a fresh start. Let me get into an environment that's more entrepreneurial. And from there, my wife and I ended up buying a duplex as our first investment. And that was really important for us to get some traction. And it's a strategy that's simple, but I think anybody who is young should absolutely consider it because you can live in one unit, rent out the other units. And if you're used to living in apartments anyway, you're really not changing the lifestyle very much. You just change it from paying rent to collecting rent. So that was a great way for us to get started to test out this theory around investing. And from there, we actually started to buy, more real estate properties. Bought a 3-unit building. I bought an 8-unit building because I really wanted to scale into commercial real estate. And right around that time is when the company I was working for went into bankruptcy. And that was such a challenge because my wife was pregnant with our second child. We had just put, as you know, we put a sizable down payment on that second property. And back then, the way I thought you invested was you saved your money and you bought a property, right? So it's how I thought everybody invested. Now we would go to meetups and network with people, and I recall meeting people who were investing a little differently. They were raising capital, but I just didn't think that was for me. That was for folks who had rich friends or people who had years and years of experience or maybe had a construction company or a property management company, but not for me. It just wasn't something I was supposed to be doing. And it wasn't until I was sitting there, I put down that 6 figures on that 8-unit building. My wife and I are talking about what we're going to do. I recalled a really good friend of mine had went from building her portfolio from a 3-unit building to a 9-unit building to 90 units, all within about 18 months. And I recall taking her to lunch and I asked her, I said, "Hey, from 3 to 9 units, I get that. That makes sense. How in the world do you go from 9 to 90?" And she shared with me that she met some investors online and they wanted to invest with her. And after a while, she finally agreed to invest with them. And she went out, she found the properties. She's really doing the asset management, or she's responsible for making sure those properties make money. And those investors, in exchange, they get a return. So she's the first person that I saw go from kind of building her own portfolio to raising capital. And we talked a little bit more about it. She gave me some tips and insights on there. And that was probably the time the seed was really planted where I could see myself doing it. Because before then, again, I met one guy, but he had like 300 units. And I'm like, okay, he's been investing for like 40 years. So I just couldn't see a connection between what he had done to where I was at. But I watched this woman go from 3 units to 9 units and then from 9 to 90. And I had gone, when I met her, we didn't have a property. So then we bought our 2 unit. And at that moment, we had our 8-unit building as well into 3 units. We had 13 units. So I could see that connection and transition. I kid you not, a couple of months later, I met the guy who became my mentor, Joe Fairless. And Joe at the time had only, well, not only, but he had one deal. He had raised $1 million for this deal, which was just awe inspiring to me. And I ended up hiring him to help teach me how to do the same thing. Now, Joe has gone on to rate, to invest in over $2.7 billion worth of apartments. So I kind of got lucky. And the only reason I met Joe was because he's in Cincinnati. My wife is from Cincinnati. I was looking to connect with other investors in Cincinnati, and a lot of people tagged him and said, "Oh, you should talk to this guy." And I talked to that guy. I'm like, "Oh, it's cool." And he's got a marketing background. I got a marketing background. I'm like, "Oh, okay. If he figures this out, I might be able to figure this out." So that was really key for me. And again, when you surround yourself with people who are doing those things, it makes it easier for you to see how you can kind of follow in their footsteps.
How did you and so by the way, so Joe Fairless, so he's actually that's one of the things that whenever you get into a business, having strong advice or counsel is always like the first recommendation. And that's obviously what you did. You sat down with somebody. And I think that's where I think most people when they start, they think that if somebody's further down the road than them, that they just don't have time or they don't want to help somebody that's a little bit further back. But what I found is like the really successful people are more than happy at having a conversation. And so you went out, you found somebody and just asked them direct, how did you do it? And then you went further and actually had, a mentor of somebody that's actually doing it at the top level. And that's actually one of the, it's funny because we went into the same. So Joe is somebody that's actually part of our council as well on Fairs Capital. So, and he's been fantastic, real top producer, but he just, when you have somebody like that that genuinely cares and wants to see you do well and has been in the business and has proven himself over and over, I mean, how important has that been for you and your success?
Listen, it's absolutely critical for a few different reasons. One, as you alluded to, you want to have people who have seen things and done things to bounce things off of. The truth is, this business is hard, and there are going to be great days, there are going to be some crappy days, and you want to know who to call when you need help. And I'll tell you directly, there have been days where we've had deals, phenomenal deals, but maybe investor feedback wasn't as stellar as we had hoped, so I've called him and said, "Hey, man, didn't get the response I thought I was going to get. What are your thoughts here? What should I do?" And he was able to give me some counsel there, and that was huge for me starting out. Right, just to know in my corner, you have that. And here's the thing: I know a lot of people may not be interested in raising capital. And again, I didn't think it was for me, so I completely understand the sentiment. But I didn't think it was for me for three reasons. One, I didn't think I had the network. Okay. When I left corporate America, or when I was starting to, float this topic around with my peers, there was very little interest in people. And it really makes sense when I step back, but at the time it didn't. People who work W-2 jobs, they like a sense of comfort. They like a sense of control, stability, predictability. And investing in real estate can feel risky, particularly investing in syndications with the guy whose office is down the hallway from yours, right? So they weren't exactly enthusiastic to jump into these deals. The second thing, though, is I didn't know what I didn't know. I had great success with the small portfolio that I was building, but a lot of that was market timing. A lot of that was, self-managing, and I just didn't know if I could replicate that over and over on a consistent basis. The third thing for me, though, was really trying to understand how I could protect investors. These are friends, family, people that I know, like, and trust, people who are going to be investing a considerable amount of money with me, and I wasn't that brazen to think that I could figure it out. Certainly I could, but is that the risk I want to take with $50,000, $100,000 of someone else's hard earned money? Think about it differently. For an accredited investor, that's someone who is making $200,000 annually. Okay. Let's say someone invests $100,000 with me. That is literally half a year's salary for them. And that's not even getting into taxes, right? That's just salary. That's half a year's salary. So 6 months of someone's life, 40 hours a week for 6 months, they are placing with you because they trust you to help them protect that capital and grow that capital. That is a responsibility. And it's a responsibility that I took seriously, seriously enough to say, hey, I know what I do know, but also know what I don't know. And I need somebody I can call when I run into those situations. So that was the reason for me to hire a coach and have somebody in my corner. And today we kind of coach as well. And that's one of the big things I tell people is, listen, you absolutely could try to figure this out by yourself. but you want someone who can help you cut down a learning curve. You want someone who can navigate the market environment, someone who can look over your shoulders in case you did make a mistake with your underwriting or if you did miss something in the market. And really, the goal here is to make sure that you are confident, but also credible in the work that you're doing so you can protect your investors. And I just think that is absolutely in not just important, but it's something that is imperative if you are going to raise capital from other investors.
Yeah, and that goes back to protecting your reputation is the most important thing that you have, right? And you look at, okay, if you're any space that you're in, any industry that you're in, if you want to compete at the top level, all industries, I mean, if you look at the Olympics, for example, they all have coaches. It would be silly to see an Olympic athlete and say, "Oh, I don't need a coach." Like that would just it wouldn't even be a thing, right? But that actually applies to not only all sports, but it does like I look at business as a sport. I mean, I played hockey prior to real estate, and this I always take that analogy. It's like there's a team sport, but then the coaching and a lot of those key lessons they apply. If you want to perform at your best level, you need somebody there to be able to give you insight and counsel that maybe you can't see for yourself as well, and sometimes even calling you out, and that's where the humility, it's like to be able to take wise counsel when somebody that's maybe further down the road say, hey, listen, there's a blind spot there you should look at, like having somebody in your corner that can actually point at you, and then your ability to be able to receive it in a like a humble way, to be able to look at and like, you know what, there's some truth to that. That's where like real growth lies, I found, when it comes to coaching and
Mark,
advisors.
if I can on that point, I think that is so
Yeah.
critical. When I think about people who find success and those who don't, there are lots of folks who hire coaches, but if you don't take the advice of your coach, if you're
Yeah.
not listening, if you're not reaching out to them and being honest and transparent with the challenges you face, you're not going to get there. Whether we're talking business or you're trying to lose weight, but you're sneaking in Twinkies or whatever, like, listen, then you got to look in the mirror and be honest with yourself. Like, how committed to this thing are you? And I recall early on, there was one of the tasks that I was supposed to do and I was having a hard time getting it done. And keep in mind, man, I had, two young kids now. I got a full-time job. I'm trying to grow the syndication business. I actually started doing some flip projects to generate some more capital. So that's kicking my tail. I think I just launched the podcast. Dude, I'm exhausted and I'm supposed to be analyzing all these deals. And I'm like, listen, I'm not making progress. Like I don't think I've analyzed a deal this week. And I remember just coming to him like, listen, man, I'm struggling here. Like, do you have like thoughts? Like, how do I overcome this? Like, is there and in my head, I think I was hoping to get like a shortcut
Yeah, some
of some, yeah, like, oh,
sympathy,
just do it this way.
sympathy,
You'll
yeah.
save 50% of
Sounded
the
good in my
time.
head, and then it came out.
Yeah, I don't know what I was expecting.
Yeah,
He basically told me, like,
yeah,
man, figure it out, get it done. And I was like, "All right." And I remember I'm not like I wasn't really like a caffeine guy. I don't really drink coffee that like that. I remember it was like a Thursday night, and I remember it being like 10:30 night. My kids had just went to sleep. I'm gonna get my headphones. I put on a whole playlist. I got me like a little Red Bull, and I'm like, "Well, we're gonna be up until this is done." And I finished like 3 in the morning, but I finished it. I knocked it out and got it done. And I say that because that was the moment when I decided, in business and in life, we all have goals, right? Early in the year, we all set our goals. Oh, I want to do this. I want to do that, right? And you get into it. And then at some point, it gets hard. We're all motivated out of the gate, right? We're all inspired out of the gate. But at some point, you get slapped in the face and you're like, ooh, do I want to keep on this truck or do I want to turn around? Like maybe it's not that important. Well, that was the moment I can look back on and say, I decided this was a priority. And at the end of the day, you have to decide to take action and get over all your excuses and all your BS and all those limiting beliefs and just grab life by the horn and make it happen. And it's going to happen over and over in business, but at some point, you got to decide to become the person you want to be and you have to take action. And I can look back distinctly that night. That night was the night I decided I was going to be a multifamily investor and I was going to raise money and syndicate and help other people get the same perks and benefits of investing in real estate without the hassles of being a landlord. But that was the night. And I didn't know it at the time, but I can go back now definitively and say that was the turning point.
Yeah. That's so good. And I think that is so applicable to all the listeners, like any business that you're running right now. I'll stack onto the story that you just shared that Napoleon Hill, when he wrote his book, Think and Grow Rich, he directly referenced that the point at which was their lowest point in all these, like, there was like 500 successful entrepreneurs that like just killed it. He said that the one thing that was consistent is that all of them, they got to a point of like almost quitting, and they almost did quit, but they took one step further past that point of like their hardest point in their journey. And that's when they had this big breakthrough. And so that's where for yourself, for yourself, that it's like there was a moment. And I look back for me as well. And there's sometimes there was like a moment, and then other times it was like, okay, this is like a season of like doubling down. But if you're going through a struggle right now, take I recommend take John's the example there that he had shared, and it's like that's when you double down, and that's actually when you tell your subconscious, even it's like, okay, I'm burning the ships, and it's game time right now, and then you just do what's necessary to get it done, and then it's just a matter of time till success comes.
Yeah, I love it, man, and it's so true because, you know, you also have to stack a belief of yourself that is who you are as an individual. And I know we were talking about, sports and the kids before hitting record, and I pushed my kids into wrestling, especially the youngest one. And part of it for me was when I think about those moments, I always go back to wrestling. I go to high school wrestling. I sucked my freshman year, man. I lost every match. If someone stepped on the mat across from me, they got their hand raised and not me. And it got to the point where my mom wanted me to quit. My grandmother wanted me to quit. I'm coming with bruises, right, on my face. And they're like, why are you doing this? Like, you're not good. You're getting your tail whooped. Like, and I couldn't quit because I remember I was in marching band and there was a kid who sat behind me, and I was casually talking to the person next to me. I was like, oh, I'm thinking about going out for the wrestling team. And this kid just tore into me. Didn't know me. He didn't mean it viciously. He had no malicious intent, but he was on the team the year before, and he just told me how hard it was and I wasn't going to make it. And as he talked, I got more and more heated. And every day when I'm over there and someone's cross facing me and putting their little bony forearm across my nose, and I got to rearrange it, right? Or some 300-pound kid is falling on my ankle. Every time I thought of quitting, I thought of that kid. And this kid never would have thought, like, he didn't even remember who I was, right? This was an innocuous comment this kid made, but to me, it represented everything about me and my character and who I was going to be. And I ended up finishing with my name on the board for career wins. And anytime things get hard for me, I can go back to that because we had a quote on that wrestling room wall, and it said, hard times don't laugh, tough people do. Right? Tough times don't laugh, tough people do. And you've got to have something you can pull back on, man, because you're going to get your tail kicked. You're going to get your teeth punched in, and you've got to be able to look in the mirror and say, all right, bro, what you going to do? You going to lay down and you going to get up.
Yeah, that's such a powerful, like that strong desire. And it doesn't even it's funny how it can be something small, like what somebody said. It can be, a vision, it can be, putting food on the table, it can be a charity, it can be a competitive advantage, can be an award, it can be, recognition from your mentor. It can, whatever that is. That's such a good example that you shared of motivation to be able to tap into when it gets hard, to say, yeah, I'm going to do it because of this. And I'm sure like with wrestling, that made you better than if you didn't tap into that. I would think, is that been your experience?
Yeah, absolutely. And it's funny if if you ever talk to wrestlers, like every like adult I know, and again, just with my son wrestling, most of the parents are, most of the dads are former wrestlers too. They all say the same thing. Like we still rely on it in our day-to-day life experiences we had 20 years ago. And it's because you're by yourself. I think the difference in that sport in particular is you are by yourself. You're exposed. It's very vulnerable. Like at the end of the day, it's barbaric. Like some other person is going to pin your shoulders to the mat. They're going to stand over and say, I'm better than you. I'm stronger than you. I
Yeah.
defeated you. it's
Yeah.
not like basketball where like, oh, coach didn't let me play enough, or Johnny didn't pass me the ball. No, man, it's like it's you. You went out there on that mat and that dude beat you. And you got to
Yeah.
eat that. You got to reflect internally about it. You have to be able to process that. You got to figure out how to get better. You got to figure out all that, right?
Mm.
And the toughness it takes internally to be able to deal with that and to go out there and to not quit, it's what makes you. And I think anyone who's willing to stick through that, there's a mental toughness that is just sticks with you in life. And for us, I can always go back to that because I know I'm tough. It's not that I'm tough because I'm bigger and badder than you. It's just mentally I know what I've been through. I know I've trained myself to do hard things. This is just another hard thing. And if I can see other people doing it, I just got to figure out how to do it, right? Like you either win or get feedback. It's something I tell my children all the time. We don't lose. We win, we get feedback. Sometimes that feedback is we need more work. We need more practice. We need a new coach. We need to train harder. We need to get better at this. We need to figure out how to navigate this, right? But you've got to take the feedback. Now, if you just don't win and keep not winning, yeah, you're going to lose eventually. But we have bad deals or things that don't pencil out, or you lose money. We got to step back. All right, well, why did this happen? What's the feedback? What happened in the market? How do we protect ourselves from this happening again? What adjustments do we need to make? We had a bad hire. Okay, well, why did this hire not work? We hired this marketing agency. Okay, we didn't get the results we wanted. Why did that happen? What questions do we need to ask? What track record do we need to be looking for? What questions do we need to be asking referrals, right? So you've got to step back and get the feedback, learn the lesson though. And when you learn the lesson, you win ultimately. So it's just a matter of doing that. And it like you said, it sucks when you're in it, man. I remember during that time when that second company was going into bankruptcy, I had the bright idea of flipping houses to try to generate some more money. And there was a guy I met, young dude, and he was working with this other developer. He was super ecstatic about it. This developer was driving people around to showcase all of his rehab projects. And I'm like, this is amazing. This guy's got a great model. And he did. He was doing about 5 or 6 slips at a time, and you could see them at different phases of construction. He had a real estate agent team, he had his contracting crew, he had it all together. I'm like, "This is awesome, I want in." So, my buddy was already in, he showed me the property he bought. I'm like, "Bet," and they did everything. They found the property, they brought you somebody to finance it. You just had to bring 10% and that's it. So I'm like, "Bet." And I'm in, and I remember my wife was asking questions, and I kept dismissing her because she didn't see the vision,
Right.
right?
You
I'm like,
yeah.
"Oh, you trying to be critical, you trying to poke holes. No, no, it's gonna work, it's great."
Yeah. Yeah.
Well,
Yeah.
we sat down with him, and this was probably the first time I'm like, "Oh, wait a minute." And the thing was, he was doing these trolley tours where he would showcase his work. He was doing this once a month. And the next trolley tour, there were more and more people, and he had more and more projects he was doing, but the crew wasn't growing. And I was like, "Hey, man,
Mm.
like, how are you going to keep up the same pace if you're
Yeah.
not growing the amount of crews, but you've increased the workload by 40%?" And he's like, "Ah, don't worry about that, John. You just focus on this part." And that was the first red flag. And I should have stopped and pulled out at that moment. But I was so, I guess, optimistic and caught up with like, "Oh no, I'm gonna flip it. I'm gonna make this 40,000. I'm gonna take that 40,000 plus my initial investment. I'm gonna be able to do." I was already spending money in my head, right? And buying other assets. And I remember, sure enough, that was the issue. The project started moving slower, the draws were slower, and it was a house of cards, and it came crashing down. And I ended up losing 6 figures on my flip project. The flip project that was supposed to make me money, I lost money and lost a lot of money. And I ended up hiring this other coach. And again, I don't know what I was thinking with this coach, but I sat down and he was more of a therapist kind of coach. But I sat down and, I couldn't talk to my wife anymore because I was embarrassed. She kind of warned me I effed up and I didn't listen to her. So I really didn't want her to be on some I told you so kind of stuff. Right. And the job situation, I was depressed there, wasn't growing. I just felt like a failure, man. And I remember sitting on this guy's couch and I'm talking to him about it. And I'm like, what am I do, man? I'm gonna lose this money. Like, I don't know what to do. This company is about to go under. And he said, sounds like you're failing forward. I was like, what? That's the best you got for me, man? Failing forward? What does that even mean? And I remember I remember leaving his office like, what a quack. Like this, what failing forward? But he was right. He was right.
Yeah.
But I just wasn't in the mindset to take the message. And
When
when
did
I
you catch on to the truth to that statement of failing forward? How long did that take you to kind of really link up, "Oh, there's
it
some wisdom in what he said?"
it started to sink in once I sold the property, because once when you're under the anchor, like, the
Yeah.
only thing you can think of is just
Yeah.
getting some air, right? So,
Yeah, that's
once
right.
we sold that property, even though I lost money, the bleeding had stopped. Because at that point, I was just working to try to
Yeah.
finish, like, I would take my job, my W-2 income to pay for the construction to try to
Yeah.
get this property done, so I was just in the hole. So once that stopped, I could step back and say, "Okay, where do we go from here? How do I adjust? Do I don't think I want to flip anymore. So let's again, what went wrong?" And I would say a few months later, it really started to make sense to me about failing forward. And the notion is really this. When you have these losses, if you treat it as a loss, then that's exactly what it's going to be. But if you treat it as
Mhm.
a lesson, then you gain some experience and you move forward. And the big thing for me was I was so scared of flipping because, again, I didn't have a construction background. I didn't know what I was
Right.
doing. I put all of my faith and confidence in this other guy. And I saw what he was doing, and he actually had a good model, but he wasn't a good businessman. He wasn't good at project management. He wasn't good at scaling. So once I stopped trading kind of my voice and just letting other people do what they want to do, and I took control, it empowered me. And I tell investors all the time, you always have a voice. If Even if you're a passive investor, talk to operators, talk to syndicators, talk to those sponsors, ask questions. And if you don't like what you hear, back away. But you should never have someone dismiss your fears or your concerns. If it's a legit question that you have or concern, I should be able to articulate, or Mark should be able to articulate how we're going to address or how we mitigate that risk. If they're dismissive, that's not somebody you want to partner with. So it took some time to really learn that and build that confidence, but I would say a few months.
Yeah, and that's where I think you nailed it. If you're looking to go into an investment and if they can't give you a very clear, tangible answer that makes sense in your own words, that's another thing that I've seen in the investment world is like you ask a question, but then you get a very complex answer that you don't understand. And it's almost like just in many industries, like it's just that's like that's a we'll just say that's a common approach to sound very we'll say complex so that you just say, "Oh, okay." Instead of like, no, like, "Can you help me understand? Can you break it down?" And if they can't break it down in a simple way, then they don't know it. And so it's interesting. You just start digging in, you realize like, geez, the business model needs to be able to make sense. And that's where the syndication where you actually partner with other investors and you go in and you have one operator that's looking after and they have a team to be able to execute on the business plan and to be able to have everybody win on that makes sense. You buy a property, it's already cash flowing, you fix it up over a period of a couple of years, you sell it in a period of 2 to 5 years, and you force appreciation and you buy in up and coming markets and you protect the downside by doing these three golden rules. That makes sense to me. I could get behind that. But I think that's where you it's a really great point is like sometimes you get so we'll say caught up in your vision or your dream as you eloquently said, and it's like I don't want to hear it, and you kind of have blinders on instead of like really digging in, and it's like does this make sense, and it can the operator actually communicate effectively, what happens if this happens, what happens if this happens. And one last thing with that, what's interesting is that I found it was something my dad always said growing up. He said, "Mark," he said, "it's not generally the first mistake that you make that gets you in trouble. Generally, it's like the third or fourth mistake is what catches you. And so if you slow down and you start to realize the mistakes along the way and catch
Yep.
it, then you can prevent some sort of like tragedy or big errors in the future." And I thought like, Oh, there's the real wisdom, and it kind of applies to the story you shared and to many of my own in the past as well.
That's a great quote from your dad, and he's absolutely spot on, right? You can only
Yeah,
fix the first mistake. It's when you start compounding them is where it starts to fall
yeah,
apart.
yeah. So good. Thanks for sharing that story. That's
Yeah,
really good. What would advice would you give the listeners that maybe they're scared to take that next step,
yeah,
right? So, they're in a business right now that they hate, or they're working in a business that, they're as an employee and they're working and they're
yeah,
just scared, or maybe they're looking to get more into the investing side of it, and they're like, fear is a real thing.
yeah.
How you've overcome that in the past? What advice would you give to help the listeners take that next step?
It's a great question. I think the first thing you have to do is identify the fear, label it, be very clear on what that concern is. Uh, I didn't clearly identify my fear of doing a flip and not knowing what I was doing and losing money, which was the real fear, right? The fear was I was going to do this flip and I was going to mess it up and I was going to lose money. Well, guess what? I ended up doing a flip. I ended up working with the wrong person. I ended up losing money. Well, I could have did that by myself. And the key here is when you identify the fear, well, now you can start to figure out the solution. And for me, it wasn't just find somebody else to do it. It was, hey, let's learn about this. Let's figure out who has done this successfully. Let's get a coach. Let's partner with someone. So it wasn't the partnership that was the issue. It was the partner that was the issue. And I take full accountability for not doing a better job of vetting that individual. So lean into the fear and be honest. This is why I think coaching and partnerships and mentorship is so key because you can really cut down that learning curve if you align yourself with the right individuals. So that's the biggest thing is just to lean into that fear, recognize what it is. Is it fear of a certain outcome? Is it fear of what happens if this thing happens? Sometimes it's education, sometimes it's a person, but usually there is someone who can help you navigate that fear.
Mm, yeah, that's really smart, labeling that fear. And sometimes if you go down that road, you realize, oh, that's not as big as I'm making it out in my own head, right? You say it out loud and you realize, oh, that's not so bad. If that happens, well, what happens if, this happens? It's like, well, that's not so bad. You just start, I think that's great advice. You label what it is, and sometimes it's not as big as what you think.
And Mark, I would say too, on top of that, is just build the resourcefulness, right? There's one thing to have resources, there's another thing to be resourceful. And what helped me do our first investment was knowing where to go for answers, recognizing you're never going to know everything. But even when we bought that first duplex, we started attending these RIA meetups and things like that. Because if I had a question, something I couldn't find by, Google or Bigger Pockets, I knew 3 people I could call, and if they didn't know the answer, they knew who they would call to get me the answer, and that's really important as well, going back to, the network is once you're comfortable that you know where to get the answers, you feel more empowered to take action.
Mm. It reminds me of the story of Henry Ford when he was nailed or pegged as being, was it ignorant? And he actually sued the newspapers that labeled them as such. And they went to court, and the lawyer was, I'm not sure if you've heard this
No, I
story
haven't heard
before.
this one.
Yeah, the lawyer was pestering him on the stand, Henry Ford, and said, he was trying to stump him on how many soldiers came over, during the American Revolution, and he's like, there was a very offensive question that the lawyer ended up asking Henry Ford, and then Henry Ford basically, like, he had enough of it, and he said, "Let me remind you, Mister Lawyer," whatever his name was. He said, "I have a row of buttons on my desk, and any question that I need answered, I can press any one of those buttons and I can get the information to the question that I have in any subject in regards to the industry that I'm serving." And it like stumped the lawyer, and everybody was silent because it was such a solid answer on the ability to be resourceful, as you had mentioned, and that it was not one of ignorance. It was one of like high education. Is that you don't necessarily need to have all the answers in your own mind, but if you can get access to it, there's no difference of you having in your mind versus getting it from somebody else. You come to the same answer and the same outcome. And actually, I would even argue it would even be more because the person that you're pulling the information from is likely further ahead than if you just have it in your own mind because that's what they're doing, full time, right? To be able to pull wise counsel. And so I think that resourcefulness piece of advice that you gave is so important when you're running your business.
Yeah, I love that story. Thanks for sharing that.
Yeah. No, that's so what would you say from an operator? Because through the years of investing, like you start to realize who the operator is and what the team is to be able to execute. It becomes like so critical. You can take a good deal and make it great. You can take a great deal and make it not great, right? What would you say would be some like key things that you would look for when you are, when you're maybe giving advice to an investor saying what to look for in an operator when they're investing?
Yeah, I think one of the main things to look for in an operator is character, and character is really hard to gauge. One of the things I'm looking for is just communication. How do they talk to you? Again, is there mutual respect? Do they respect the questions that you have? Are they giving you the time of day, or are they just trying to sell you? So communication is going to be key there, and respect. I think the other thing is you always want to understand how they handle things when it doesn't go according to plan. I mean, we're all great when things are great and rents are up and we're all making money. Who are they when things are not great? I talked about that flip project and I mentioned I lost six figures. Well, I didn't have to lose six figures. I could have lost less money, still would have lost money, but it wasn't six figures. The reason I lost more is the hard money lender was an individual. And I made an agreement with them that, hey, y'all believed in me. This isn't your fault. It's not necessarily my fault, but I'm still accountable. If you all help me get out of this situation, I will just continue to make the payments. There was a point where I could have just said, you know what? I'm gonna cut my losses here. Here's the keys. Y'all figure this out. But I didn't. And that was because I believed that if you believe in me, I'm going to do everything in my power to pay you back and take care of you. There were other investors who absolutely did that with that same investor, but we were able to finish that project and we ended up actually losing more money because of that. But to me, from a character standpoint, it was important to hold up my end of the bargain because what they did, what that developer did had nothing to do with them. So who are you when chips get down and things get hard? There are groups right now who are struggling, where deals are not penciling. Are they still taking their asset management fees? Are they trying to make sure that investors at least get their initial capital back? How are they making these decisions and what are their principles and character there? So you want to learn about those things. I would like to ask specifically, tell me about a deal that didn't pan out or deal that failed and just see how they talk. It's not about the deal specifically, but do they blame the contractor? Do they blame their partner? Do they blame interest rates? Or do they take accountability and talk about the adjustments they've made in their process since then? We don't flip because I decided I don't like deals where we're not making income. I like deals where there's already income coming in and it's more operational. And I just go and say, how do we make more money? I don't like deals where there's no money and we only make money when we sell. Like I just decided that's not something I like. So how do you adjust when deals don't go according to plan? That's really the biggest indicator. If you can figure that out and figure out their character, the rest of it will figure itself out. But a good operator is going to be able to have great answers for any specific questions you have.
That's really good. It's interesting, even for if you're hiring somebody, that is the biggest telltale sign in any, say you're hiring an employee. If they're blaming people, their past employer, that this was the reason and that, it's like an instant no for me. And, but when you start to hear, you know what, this happened, but this is what I learned from it, it's so rare out there, but it becomes very clear that that's what you're going to deal with moving forward with your own role because there's always things that go sideways, right? And so you on a big deal you want to make sure that doesn't happen, but I just mean in life overall, if you get somebody that takes true ownership, then it's never a I'm going to chase you to take ownership. It's like, okay, they're going to learn, they're going to get better, and that person will always beat somebody that blames somebody else. They'll always get ahead of them in life, but it is more rare for sure. And I would just that same kind of picking an operator, but picking employees is And friends, I would say as well. I would bring that over to your friendship group. If you are hanging around with other people that are just blaming people all the time, that's going to rub off on you, and you're going to be doing that in front of others. And like top producers, they flee. Like when I start hearing people blaming, it's just like the conversation just doesn't. It won't go through the hour like we're having right now. It's like let's move on because there is an alignment here, right? Yeah, very cool. Well, we could keep going on here, John. Yeah, I want to ask you one last question before we get into the rapid fire questions. But what would you say would be the biggest thing an investor when they're looking at a deal to protect their downside? You had referenced that one point in regards to uh, buying properties that are making income, right? Is there anything else that you would stack on top of that that would be like telltale things that you would look for in a deal, or advice that we give investors when they're looking at a deal before investing?
So I think this is one of those things where you got to be a little careful because every investor is going to be different. So I would say develop your own investing thesis. What do you look for? What are your goals? They may not be the same as mine, but make sure the investments you make match your risk tolerance and your goals. So if you're younger, as an example, someone in your late 20s making good money, you may have a longer investing horizon. So maybe you want to take more risk upfront. Maybe you want to invest in development deals or crypto or things that have a higher potential for big returns. If you're older, maybe you're in retirement now, maybe you want to focus more on solid cash on cash type operations. Maybe there's not much upside, maybe there's not even value add, but you're focusing more on in place cash on cash returns. So I say all that with the caveat to say make sure your investing goals match your investing strategy. With that said, specifically, I want to make sure I understand the business plan. Like you said earlier, if it's too complex or they can't really explain certain things, I'm going to be out. The plan should be really simple, really straightforward. I like to understand the story of a deal. So, why is this property for sale now? Is it the owners have had it for 20 years and they're ready to retire? Is it a failed syndication? Was it bought 3 years ago, but the interest rates have killed it? Why is it for sale now? What's the business plan? What are we going to do? And then a really specific question, and I don't necessarily ask it, but it's something I'm looking for. Does the loan match the business plan? I think a lot of people are saying, hey, I only do fixed rate or fixed debt. And I get it. I understand the risk involved with variable interest rates. However, there are some business plans where it makes more sense to have a variable rate. I'm not saying you should do either. I'm just saying make sure you understand the business plan for that asset. If you're going to increase the value of a property by 100% in, let's say, 2 years, you probably don't want that equity tied up for the next five, right? So you may, in that case, want to have a short term or variable rate loan. It really just depends on the business plan and what you're investing in. But that also is why I say it depends on your investing strategy. So the more money you're going to make, you're going to have to take a little bit more risk, whether it be with development, whether it be with a deeper value add renovation, and then obviously for more of a in place cash on cash, a little less risk there, but maybe not the same level of upside. So just make sure you understand the business plan and that the key aspects of the business plan match what you're seeing on paper.
Very good. That's wise counsel there that you gave. Very well said. All right. So we have the rapid fire part here. So, first question, you ready for it, John?
Let's go.
All right. Okay. So, which book has had the biggest impact on your, we'll call it business or wealth creation?
A lot of good options there. I've got to start with the first one though, and I mean, there's obviously Rich Dad Poor Dad, which is kind of got my head into space. But there's a book that where is it at? There it is. It's The Power of Focus. And
Mm,
I read this book when I was in college, and it's just really, really good because it really helped me understand how much control and influence I had over creating the future that I wanted. I'll give you a little nugget. It has nothing to do with real estate, but there's a part in the book where it talks about if you have a significant other, asking them to rank how you were for that week. And hey, on a scale of 1 to 10, how was I as a husband? And if let's say you get an 8, you say, okay, out of 8, you take that. What could I have done to get a 10? And this is a great way to uncover like little things like, oh, hey, I told you I wanted to go to, this restaurant. And I know we made dinner plans, but I was really hoping you would take me there. Right. So, whatever it is, it gives you a chance to uncover little things. And you can do that with business, but there's a lot of little nuggets. That was one that I read early in my, like when my wife were starting to get more serious. And it's something that when we were living afar, we would do it. So, I love the book though. I've actually never finished reading it, so it's very ironic. I never finished reading The Power of Focus, but it's because every time I would read it, like that paragraph or that chapter get me so fired up. I had to just put it down and start working. So it's a great book. Love that one. The Power of Focus.
So, yeah, how am I doing? And out of a 10, and they would say 8, and what would make it a 10? That's the question.
Yeah, and you ask, "Hey, what could I have done to get a 10?" And you can do this with your kids, you can
Okay,
do this in
that's so
business,
good.
you can do this with your clients, right? You can do this with
Yeah,
anybody.
it's very
And it's
yeah,
something like I joke with my not joke, but I did it with my kids. It was like, "Hey, how was I as a dad this week?" "Oh, you were a 7," right? They might be jerks. "You're a 3," right? And it's like, "Okay." But you
yeah,
just take it. "Okay, what could I have done to get a 10?" "Well, I told you I wanted to go here for dinner, and we want to do this, and I
yeah,
told you I wanted to do." "Okay." But you give them a platform to express
yeah.
themselves, to share what they
That's
thought,
good.
and again, ideally, it goes 2 ways, right? So now I can tell you about yourself, and we can figure out, are we actually gonna work to
You
get
gonna
10s, or
ask
are we
me
just gonna
now?
have our
Yeah,
agreements,
it's
right?
my
But it's a cool little exercise, and that's just one. There's
yeah.
a lot of different things in there, but that's just one exercise that's in the book.
Yeah, I love that because it forces them to actually think and give you substance or like clarity in what to do.
Yep,
That's a very good question.
yep.
Very good. Is Jack, I believe Jack Canfield wrote
Yeah,
that.
yep.
Yeah, yeah,
Jack
good.
Canfield, yep.
Yeah, I because that's an old school book that I actually had, and I think I started that book as well. I know I started it, but I don't know if I finished it. So maybe we have that in that in common. But very cool. Okay, so next question is 3 words to describe you. What would they be?
Ooh, resilient, passionate, and, curious.
Well done. Well done. All right. Last question. What advice would you give the entrepreneurs that are listening out there? If you were to give one last piece of advice.
Uh, Take action. So, I mean, whatever challenge you're facing, more action is better than no action. Don't sit and try to solve the problem forever. The truth is, you're better off finding the person who knows how to find it. This goes to the who, not how. But take action. And again, whether it be a mentor, a coach, whether it be a partner, whether it be a specialist or an advisor, figure out how to overcome whatever challenge it is that you're facing and take action on it.
Great advice. It's so simple yet so profound in the sense of your ability to get results. So very good. Well, John, this was great. How can listeners connect with you? They want to reach out. What's the best way they can connect?
Yeah, if you like podcasts, we've got a show called Multifamily Insights. It's available wherever you listen to podcasts. You can check it out there. We also have a sample deal package. If you want to wrap your head around multifamily investing, but need to see numbers and what deal structures look like and all that kind of stuff, we have a sample deal package which will help you get a little bit more insight into what to seek out. And you can go to casmoncapital.com/sample deal to check that out.
Very cool. John, thanks again. This is a real pleasure.
Absolutely. Hey, Mark, thank you for having me.
Thanks for listening, guys. If you like the show, please share and subscribe to the channel. And just remember that the fastest way to build wealth is to grow your business, invest in real estate. I love you guys.